JJ the CPA here. Hope you're doing well. What is an LLC, limited liability company? Well, the first thing I want you to know is I am a practicing CPA. I have over 28 years of experience working with thousands of businesses. And an LLC is a legal designation. And I'll tell you this, if you'll grasp this right now, you will be head and shoulders above most bankers, most attorneys, and many CPAs or other professionals that you're involved with, because many think an LLC is a legal designation as well as a tax designation. Many think that if you're an LLC, you're a partnership, or if you're an LLC single member, that you're a sole proprietorship filing a Schedule C. The thing that you just want to take away from this is that an LLC, like I just said, is only a legal designation. So the LLC has been around for around 20 years, but with the LLC, it is a chameleon, meaning when you then determine how you're going to elect to be taxed with the IRS, it has really nothing to do with you being an LLC, meaning an LLC can be taxed as anything. An LLC can be what's called a disregarded entity. That would be most popular known as a single member LLC. Single member LLC is one owner. But an LLC can file any tax form to report its income and expenses and the things that have to get reported to the IRS. Now, if you're a disregarded entity, that means that you're not filing a separate tax return. It doesn't mean disregarded like you would think in the English language dictionary. Disregarded just means that you're not filing a separate tax return. So you would be filing a Schedule C as a sole proprietor, or you would be filing a Schedule E, which is in essence reporting real estate activities, maybe even royalties. A disregarded entity that's an LLC would also be able to file what's called a Schedule F. All of these forms are filed with the individual tax return, meaning it's not a separate form that's filed with the IRS. However, an LLC can elect to be taxed as an S corporation, a partnership, or a C Corp. So for you to be electing to be a partnership, that means that you would have a partner and you'd file a Form 1065, which is the partnership tax return. If you're electing to be an S corporation, it can be one owner. And with an S corporation, you would elect what's called the S status with a Form 2553, and then your LLC would be taxed as an S corp and filing a Form 1120S for the S corporation activities. Or an LLC can be a C corporation, which just means that it is what many would call an entity for the large type businesses with many shareholders. But when you are looking at setting up a business, the LLC, really you can't go wrong with it. Yes, there is an Inc. Yes, there is limited liability partnerships. Yes, there are limited partnerships, et cetera, et cetera, et cetera. But for you, most of the time, as in 99.99999% of the time, an LLC would be the legal designation you would want to choose. And then you would want to choose how would you want to be taxed. And again, you have every option available to you. Now, typically, when you're then determining how you should be taxed, that's when you would want to talk with your tax advisor, enrolled agent, EA, or a CPA. Because the advantages then of how you elect yourself to be taxed has the greatest bearing on you in terms of the amount of tax that you and or your business is going to pay. So when you're looking at what is an LLC, it's a legal designation, meaning that's your legal entity. That's how you're set up from a legal standpoint. And the LLC then is taxed as anything. So when you become an LLC, it doesn't dictate at all how you're going to be taxed. So I've been in meetings with a CPA or an attorney or a banker, and they'll say, well, they're an LLC. And I'm like, okay, great. How are they taxed? And they say, well, they're taxed as an LLC. And I have to say, well, that doesn't actually mean anything, because an LLC can be taxed as anything. So you really can't go wrong setting your business up as an LLC from the legal aspect of it. The biggest thing that I've learned from the attorneys that I work with is that from a legal standpoint, the LLC doesn't have stock. It has units. It has a membership interest owned in units. And that is not something that then is attachable to, meaning if there's a judgment or a lawsuit against the LLC, no one can take over the LLC, meaning no one has stock to take over. What can be done is what's called a charging order. And in essence, I'm simplifying this, but when you have an LLC, the assets inside of it are protected. And if somebody were to, in essence, get a judgment to, in essence, take everything from the LLC, well, they can't. The assets can be used to satisfy a judgment, but in terms of taking over the business, that's not really something that would come about with an LLC. All that could happen is a charging order, which means that profits paid out would then go against a charging order. So in essence, someone could put a lien on the business, is a simpler way to think about it, layman terms, so that any profits that are being paid out would then go to satisfy the lien. Now, you're right. I've scooted over against the guardrail, and I'm talking to you a little bit about maybe really the world of legal, which means you'd want to talk to an attorney. But what I'm telling you is that really, when you're determining what kind of business you should be, you really should start by talking to your tax advisor and how you want to be taxed. And then you would talk with your attorney and say, okay, I've talked with my CPA, EA, tax professional. I want to be an S Corp. There would be no reason for you then not to select an LLC that I've ever been presented. So really here for the better part of my career, every business that's been set up of any client that I've had with any attorney I'm working with, it's an LLC. So start with your tax advisor, then talk with the attorney, but it shouldn't be a big discussion with the attorney because the LLC is really just going to be the route that you would need to go. And when you're setting up an LLC, you're doing that at the Secretary of State in your state. And many will say, well, I can just go set that up myself. Probably could. You could go to the Secretary of State, select that you want to be a limited liability company. Typically, it's going to indicate, what kind of LLC, either a foreign or a domestic. Well, domestic would mean you're inside that state. Foreign would mean that you're an LLC that was created outside of the state. So it doesn't have anything to do with U.S. versus foreign, as in foreign countries. The next is you're going to select a name, and as long as that name's not being used in the state, then that would be your LLC name. And then typically you're indicating what the business address is and who the registered agent is. The registered agent is who then is contacted if the public needs to contact that LLC officially. Typically, you're not even indicating who the owner is of the business in any way, shape, or form. And then usually the question that's being asked by the Secretary of State is, how long is this business going to last? And the answer should always be perpetually, meaning there is no end expected to it. And then you're paying your fee and boom, you get your certificate and you're a limited liability company. Where you need an attorney, though, is to set up the operating agreement. And in the operating agreement, it's going to spell out what happens to that business if something happens to you, or if you have a partner or other shareholders or other owners with you, how things work, who makes decisions, what happens if something happens to you, what happens to the business with your other owners, what happens to you if you become disabled, if you want to sell, who's going to own it after you would pass along. The operating agreement is massively important. And that's really where the attorneys come into play, and it's not really the tax advisors that need to be all that involved in the operating agreement, other than ensuring the operating agreement is going to be consistent with how it's going to be taxed. Also, the operating agreement indicating the basis of accounting, typically cash basis, or it could be accrual. It's not enough of a big question to stop everything, stop the presses. But it's something that you would want to make sure that the operating agreement is consistent with how you're going to be taxed and then on what basis you're going to be taxed on. But the operating agreement, even if you're the only owner of it, is important from the standpoint of, well, what happens to the business if something happens to you? And the other aspect is if you're setting up a bank account, which if you're a business, you will be, the banks want to see the operating agreement. They want to see that you're the owner or who the owners are. They want to see kind of, the standard language that goes into all of that and what the liabilities are and how they're handled, etc. So you're going to need an operating agreement. You do need to involve an attorney. So if you're going to have an attorney involved, right, which you should, well, you might as well have the attorney set that up for you at the Secretary of State. So most attorneys, they're really not getting their fee, or they shouldn't really get much of a fee for that service. What they should be charging you for is putting together that operating agreement. So it's not really an area to cut the corners. Now, I am a fan of if somebody is without an attorney, they have something simple so they think. I am a fan of if you got to just get something rolling, right? You got to get a legal designation, you get your LLC, you got to get a tax ID number, you got a deal rocking and rolling. So if you got to move faster than your advisors can move, as long as your CPA is an attorney are there in the wings and they're waiting and they're ready to pick up the pieces within moments of you doing the initial phases, I'm a fan of that. And the only reason I'm a fan of that is that if you're an LLC, you can be taxed as anything. But at the end of the day, you want to use your professionals. And typically, if you're getting ready to set up a business, then you want to be in a position where before you're setting it up, you've had these discussions. And you shouldn't be rushing through it. You shouldn't really be a do-it-yourselfer. But I have clients that, hey, they got to hurry and get something set up. So they go Secretary of State, they get the name because it's just a few questions. They want to get it done. That's great. But then, boom, the attorney comes in behind it to get the operating agreement done because that's done after it comes into play. And then any elections that are filed with the IRS, well, that's done after that LLC is set up. So that, in a nutshell, is in essence what an LLC is. Again, it's a legal designation. That's it. It doesn't dictate anything else after that. And it only does protect your name in the state. If you want to protect your name nationally, then you would do that with the U.S. Patent and Trademark Office. Or if you're in other states doing business in other states, then you would want to set up your LLC in your home state, and then you would, in essence, register that LLC in the other states that you're doing business in. And in those states, you would be a foreign LLC, meaning you're created in a state. So I will tell you this right now, you're getting into multiple states and you have questions, that's where you need to get with an attorney. Getting your answers on YouTube, even from me as a CPA with 28 years of experience, should only be this. It helps you put you in the right direction.